In this video, we'll learn how to count institutional market maker levels. So basically levels looks like this. They are impulsive rises or drops that occur on our charts, and knowing them properly will actually give you a higher probability edge. So why do we even need to count these levels? So although they are difficult at times, levels counting gives you the true market direction than any other method out there. So it gives you the exact point of market reversal and trend continuation zones. With that being said, it is wise to give this video maximum attention and learn this particular technique. What are these and how do they arise on the charts? So these are basically market impulsive rises and drops that arise due to the involvement of large financial institutions. If you have been following our channel enough, you'd know that the market is basically comprised of the institutional traders as well as the retail traders. Anyone who do not trade a corporate account is basically falling into the category of retail traders. So basically it is governed by external authorities, the International Monetary Fund, to name but a few, that governs how it's all traded. So these governors actually makes or creates an environment whereby the market makers needs to book profits at some point that will give rise to levels. So levels occurs on all time frames from the smallest M1, which is 1 minute time frame, to the monthly time frame or even the annual time frame, depending on the platform that you're using. So the general rule is each time frame consists of 3 levels of its preceding time frame. What do we mean by that? If you open a chart, look at that time frame, know or always expect to see 3 levels of its preceding time frame to have 3 levels in order to form one level of the time frame that you're observing from. So with that, or to simplify that, we are saying 1 week, one weekly level is basically made up of 3 daily levels. One daily level is basically made up of 3 H4 levels, and one H4 level is made up of 3 H1 levels. It all cascades down to say one H1 level is made up of 3 M15 levels. So after 3 levels of rise or drop, we expect to see the market to reverse. That is, at level 3, that is where there is a higher probability of seeing the market come in or reverse. However, in any time frame cycle completes, if any time frame cycle completes before its higher time frame does, a reset arises as shown below. We are saying this is the H4 time frame. On the H4 time frame, we have level 1, level 2, and level 3. However, on the H1 time frame, on this first time frame of the H4 time frame, we have 3 H1 levels, 1, 2, 3. But this is level 3 of the H4 time frame, not of the H1 time frame, sorry, not the H4 time frame. Therefore, we still need more levels to the upside. These sets are then connected with what we call reset points. These are trend continuation trading points, right? Let's go over the charts to see exactly how to trade or how to count these levels. But before we go there, check out our free Telegram channel. I've left the link in the description box below. This is Euro against Canadian dollar, Euro CAD in short, and we are going to learn the counting of levels practically on this particular pair. Right now, I'm on the monthly time frame, and the monthly time frame presents a choppiness like this. However, we just need to find where the price is coming from in the long term. In this case, we can see that it's coming from this point. This is the long-term direction that it had, and right now we are looking at this rising. So going on the weekly time frame, we can start to see levels or impulses. So basically, from this zone, we can see that we had a drop, a pullback, drop, pullback, and a drop. So to simplify or to clearly view these levels, we need to use rectangles, right? I'm going to mark this as my first level. All this is being done to find the accurate bias of where we are right now in the market so that we get entry points that have a higher probability of winning. Level 2 and then level 3 on the weekly time frame. If we want to verify, we can see that within these time levels, there are 3 daily levels, right? So where we are interested much is where we have the price. Where are we going to make our entry and in what direction? That now will require us to go on the lower time frame, which is the daily time frame from the weekly time frame, to see what has been done in this rise, right? Going on the daily time frame, this is what we see. We can see an impulsive or a choppy rise, right? Then another choppy rise to this direction, right? So let's mark the levels of the daily time frame using a different color. I'm going to use black for this time frame. So we had 1. This was the first level on the daily time frame. Then 2. The second level on the daily time frame. Right. Before we go any further, we need to verify if these levels are actually complete using the lower time frames. So going on the H4 time frame, we expect to see 3 H4 levels in this particular level, 3 H4 levels in this particular level for us to actually conclude that this is a reset, right? Going on the H4 time frame, this is what we see, right? I'm going to zoom in a little bit so that it will be clearer for us to see. In this case, we can see that we had the first impulsive rise, another rise, but later this whole rise was then cleared off, meaning this was all consolidation. From there, we had another rise, consolidation, and then the third rise. So I'm going to mark levels using a different colored rectangle. We had 1. This now is a verification way to see if we are in the right path of counting our levels. 3. Therefore, this daily level is actually legit or is actually correct. From there, we continue with our counting. 1, the first impulse, pullback, rise. Then we had what we call a continuation level. This now requires a different counting of levels technique, which is taught in our advanced course. Then 1, 2, and then the third one, where we have 1, 2, and 3 levels of the H1 time frame, right? So after this, we can now say our daily time frame is actually correct in terms of counting our levels. So what can we now say in terms of our bias, right? From there, we created a peak reversal. Then from that peak reversal, we created what we call a reset. If you recall that template that I showed you on the slides, that is where it now applies. In this case, we can see that so far we have 2 levels that have been issued. It is wise for us to expect the last level of the daily time frame to go in an upward direction. Therefore, our bias will become an upward bias. All the trades that we are going to take will now be an upwards or buys only in this case, because we want to satisfy this move where we are going to have the last daily level. So going on the H1 time frame to see what has been done in the daily level, in the last daily level that we are actually anticipating this is the last daily level. I'm going to zoom in, right? What has been done on the H1 time frame? We can see that we have been issued with 3 H1 levels, meaning the first H4 level has been completed. We have 1. I'm going to use red for this one. 1. We had 2. And then we had the last one, like that. Therefore, 3 levels of rise have been issued, meaning 1 level of the H4 time frame has been issued. Like that. So going back on the daily time frame, this is what we see. We can see that on the daily time frame, we have been issued with the first H4 level, and we are expecting to see something like this. So that we fully satisfy the war cycle. This is what we are expecting to see. First H4 level in the daily time frame, second, and then third. So our entries are going to be entries that follows the cycle. In this case, we can see that a cycle has been completed. Therefore, we need something like this H4 level to start. So basically, that is how you count your levels. It requires some logic. It requires you to be very, very analytical. But if you master it, you'd see that the markets will become a very, very easy way to get money. Not overnight, of course, but it will become something that is very interesting. See you on the next one.